The gross domestic product, or GDP, in the third quarter that ended on December 31 has grown by an impressive 7.2% versus an expectation of just 6.82%. However, gross value added growth, which is GDP minus taxes plus subsidies, has grown by 6.7%. That's just mildly better than the expectation of 6.6%. Well, economic growth has been abetted by a strong showing in agriculture, a growth of 4.1% in the third quarter. Manufacturing and construction have also grown strongly. So, is this the turnaround quarter? And can we expect growth numbers to start rebounding more sharply from here on? Those are among the key questions that we will be discussing on this show. Hello and welcome to the State of the Economy. Joining me to discuss the state of the economy are former Chief Statistician of the country, Professor TCA Anant, Sajjid Chinoy, the Chief Economist from JP Morgan, and Soumya Kanti Ghosh, the Chief Economic Advisor at State Bank of India. Gentlemen, thank you very much for joining me in this show. Well, Professor Anant, first this overall question to you. Even when as Chief Statistician you gave us the forecast for the full year, you said that it is in danger of getting revised upward. And the CSO has actually done that. When you were there, you had forecast the first advance estimates at 6.1% GVA growth. Now the CSO tells us that for this year, we will grow by 6.4% GVA and GDP by 6.6%. Satisfactory state, you would say? Is this the platform for faster growth next year?
Yes, I think on the whole, the growth is faster. I think it's also important to understand that the revision is driven from a number of updated indicators which were not available at the time of the first advance.
Okay.
Also, in particular, it's important to highlight in agriculture, the Agriculture Ministry puts out two different sets of numbers. One is for the crop production, and then there is a whole bunch of numbers which they put out in terms of various advance estimates for the non-crop segment as well. What we are seeing in the agricultural growth, and in fact the improved number of the agricultural growth, is a fairly strong improvement in the non-crop side of agriculture.
Oh.
And some of this was intimated by agriculture in their revised estimate which they had put out, I think sometime in the month of December or January. I think January.
Okay.
Those improvements in agricultural growth are playing a role both in the improvement in GVA as well as in the strong showing of the agricultural growth.
Okay, fair point, sir. So you are saying basically agriculture is always, of course, agriculture plus forestry, fishing and livestock. You're saying that the non-crop, you know, forestry, fishery and livestock probably did better.
That's right. So all of this animal husbandry, dairy,
okay.
Also to some extent horticulture, fruits and vegetables. Most our attention tends to be grabbed by the crop production because traditionally that has been the most important part. But it has been a declining importance in agriculture. It is now probably just shade over 50% or just under 50%, I don't remember exactly.
Okay.
And its proportion has been declining over the years.
Okay. Well, that's important that non-farm rural areas have been doing well, and that's an important point for policymakers as well. In the current budget, we also saw some of the subventions being extended to animal husbandry, earlier only reserved for agriculture. But Sajjid, let me come to you. What, according to you, are the positive surprises in these numbers, third quarter numbers?
Latha, a couple of things. One is that this is, a lot of focus will be on agriculture because the growth rate at 4% was higher than expected. But the fact is this is a broad-based recovery. And I think the best way to assess that is what we look at core GVA, which is GVA net of agriculture and net of public administration. I think that's the best proxy that you see of the private sector business cycle, and that has seen a solid pickup from 6.9% to 7.4%. We're now at the levels that existed just before demonetization in September of 2016. So for me, the positive here is more evidence here, tying up with the high-frequency monthly data, that the economy began to inflect 2 quarters ago, and last quarter this was broad-based. And for example, manufacturing grew despite there not being a favorable base effect, because manufacturing had grown at 8% the previous year in the same quarter. It grew again at 8% this quarter. A couple of caveats though, I think it's important to realize. The headline number of 7.2 was in part surprising, or was surprisingly positive, because the base from the previous year got revised down. So in the same quarter the previous year, GDP growth of 7 in the first round was moved down to 6.8. So there was a bit of a bump up that you got from that, and that explains some of the upward surprise compared to forecasts. One other thing I'll say is what's impressive about this is largely driven by domestic demand, because if you look at net exports, another disappointment. Compared to the previous quarter, gross exports have collapsed from 6% to 2%. Import growth has accelerated. So the global economy, as strong as it is, has not contributed to this set of numbers. Net exports has been a drag on growth this quarter. So the fact that GDP growth has accelerated so uniformly in this quarter, despite net exports being a drag, suggests a pretty broad-based increase in domestic demand, which is payback to the drag from demonetization and GST.
Okay. Well, Sajjid has pointed to the core GVA number, Soumya, which you also spoke about earlier, net of agriculture and government services. It's a very strong number. If I were to ask you to look at the disappointments in the third quarter GVA number, what would that be, Soumya?
The disappointment in the GDP numbers in the third quarter, I think the first thing is that I think the story is playing out in terms of a quarter-wise recovery, quarter-wise number and a full-year number. If you actually look into the quarter-wise GDP numbers, they are very strong. But if you look into the yearly numbers, the bump up is not significantly on the higher side. But having said that, I think the first point to note is that if you look into the yearly numbers in terms of the investment one, yes, investment has accelerated the gross fixed capital formation in the third quarter. But if you look into the year-wise numbers, that has slowed down a little bit from the last year. So that is one point of disappointment. The second thing is that if you look into the service sector's number, the service sector number on a quarter-wise basis, I mean, even though on a full-year basis they have recovered from what it was last year, but on a quarter-wise basis, you will see that the numbers are not trending significantly higher, specifically in the sectors like the trade, transport and communication sector, possibly because the demand is still picking up in the system. And the other thing which I would like to say is that in terms of the positives, if you ask me, I think agricultural sector and the construction sector stands out. The growth rate in the construction sector is 6.8%. I think is possibly the highest number which I could see from 2014-15 onwards on a quarterly basis. So that in itself is a strong omen for a possible better quarterly GDP numbers on a going forward basis.
Okay. Well, actually, let me toss that to Professor Anant. Professor Anant, construction usually draws from surplus labor in rural areas. In the past, in the rah-rah years of 2003 to 2008, we saw a lot of labor move from rural areas for construction. Construction again picking up, and as you pointed, non-farm rural occupations like fisheries, forestry, horticulture and animal husbandry doing well. Overall, do you think therefore that the rural distress is not as bad as perhaps we thought it is? Or at least on the way to recovery?
Certainly on the way to recovery. I don't know about how bad did you think and how bad is it, etc. with reference to that.
Well, there is a lot of farmer protest.
I do want to. Yeah, I think I do want to emphasize two things. One, which Soumya was pointing out just now, construction has shown signs of recovery, and if you recall, when last year I had released the GDP numbers and earlier as well in the first quarter numbers, I had pointed out that the construction sector has been a source of worry for some time now. And the major reason is the sector was affected by a lot of issues of poor governance. Those were sorted out last year around the same time frame as when demonetization happened.
Okay.
Now, the implementation of the Real Estate Regulatory Act is a major milestone in the sector.
Okay.
Because what it does is it creates a platform for more healthy growth in the future. I think what we are seeing now is that the construction sector is slowly, I don't think it has fully made itself out of the wood. Resolution of the NPA problem will go a big way towards solving a lot of their problems. But as the construction sector picks up, you should expect to see two things. One, considerable reduction in the rural distress and also significant improvements in the employment numbers as well.
Okay, gentlemen, we will have to take a break at this juncture, but we are coming back with questions on the expenditure side of the GDP. The capital formation numbers looking very good, but the private consumption looking a little soft. We are coming back to discuss all those numbers with our guests.